We are not just a team of bank exam tutors, we are in fact ex-bankers ourselves. Welcome to day 16 of daily 5 MCQ series for State Bank of India's Circle-Based Officer exam of 2025 year. In each video of this free lesson series, we will discuss 5 MCQs that are very important from the angle of the exam. Without further ado, let us begin the class. The topic of today's class will be NBFC. So what is NBFC? That will be our first question. Question 1. What does NBFC stand for? Okay. Option A, non-banking finance corporation. Option B, non-banking financial company. Option C, National Bank for Financial Corporates. Option D, non-beneficiary finance corporation. Option E, National Banking Finance Corporation. So what is the answer here? Here the answer is option B, non-banking financial company. So the full form of NBFC is non-banking financial company. Okay. Now, before going to the next question, let me briefly tell you how BankerWings can better help you prepare for the SBI CBO exam. We have launched 2 courses for SBI CBO 2025 exam. In the first course, you will get summary notes on all the topics. These notes will be crisp, precise and very to the point. But most of you might not have enough time to go through the notes. For such candidates, we have provided top, most probable and most important multiple choice questions. If you are someone who does not have enough time to go through the notes, because we know you are all working candidates, you can go through the multiple choice questions and then finish the syllabus. But apart from the summary notes and the multiple choice questions, we have also provided 10 mock tests. These mock tests, they will be as per the pattern of the actual exam. So you can expect similar type question in your real exam also. In the second course, we have provided only 10 mock tests. These mock tests, they will be, as I said, as per the trend and pattern of the actual exam. This is for those people, the second course is for those people who just want to test their preparation level. And let me tell you one thing about our courses. The quality of our courses is excellent. They are the best in the market. But that is what any tutor would say, right? That his or her content is the best. So why should you trust me? I will tell you why. Because we at BankerWings, we are not just a team of bank exam tutors. We are in fact ex-bankers ourselves. We have passed multiple bank exams, both at fresher entry level and lateral entry level. We have passed multiple IBPS exams. So when we say that we know what the banks are actually looking for in these exams, we really do, because we have worked there. Back to our daily MCQs. Question 2. Which of the following differences between banks and NBFCs is incorrect? Okay. Statement 1. An NBFC cannot accept demand deposits. Statement 2. An NBFC does not form a part of the payment and settlement system and cannot issue checks drawn on itself. Statement 3. Deposit insurance facility of DICGC is available to the deposits made in an NBFC. So, which of these 3 statements is incorrect? Okay, that is the question. Okay, let us take a look at the options before answering this one. Option A, only statement 1. Option B, only statement 2. Option C, only statement 1 and 3. Option D, only statement 1 and 2. Option E, only statement 3. So now let us evaluate the statements one by one. Statement 1 says an NBFC cannot accept demand deposits. Is it correct? Yes, that is actually correct. An NBFC, it can accept term deposit. That is, it can accept fixed deposits, but it cannot accept saving deposits or current deposits. Okay. So statement 1 is correct. So that cannot form our answer. Statement 2. An NBFC does not form a part of the payment and settlement system and cannot issue checks drawn on itself. Yes, statement 2 is also correct. An NBFC, it does not form a part of payment and settlement systems, and also it cannot issue checks drawn on itself. Statement 3. deposit insurance facility of DICGC is available to the deposits made in an NBFC. This statement is wrong. There is no deposit insurance facility of DICGC for the deposits made in NBFC. Yes, NBFC can accept term deposits, but for those term deposit, DICGC's insurance facility is not applicable. So statement 3 is wrong. So our answer will be option E, only 3. Okay, next question. Question 3. What is the duration of deposits that NBFCs can accept? So in the previous problem, we understood that NBFCs can accept term deposit. So what is the allowed duration for those deposits? Okay, options now. Option A, 12 to 60 months. Option B, 6 to 60 months. Option C, 12 to 48 months. Option D, 12 to 36 months. Option E, 12 to 120 months. Here the answer is option A, 12 to 60 months. So though NBFCs can accept term deposits, there is a time stipulation for the period of those deposits. It cannot be less than 12 months and it cannot be more than 60 months. So 1 year to 5 years, that is the duration of the deposit that is allowed for an NBFC. Okay, next question. Question 4. Which of the following is or are not applicable to an NBFC? Okay. Option A, RBI Act, that is Reserve Bank of India Act. Option B, Companies Act. Okay. Option C, Banking Regulation Act. Option D, all of RBI's master directions and circulars. Option E, none of the above. So what is the answer here? Here the answer is option C, Banking Regulation Act. It does not apply to an NBFC. RBI Act applies to NBFC, Companies Act applies to NBFC, and some of the master circulars and directions of RBI, they apply to NBFC. Even though not all of them apply, some of them do apply. But Banking Regulation Act, it does not apply to NBFC at all. Okay. Now, before going to the last question, the PDFs of all our YouTube questions and answers are available in our Telegram group. If you like the class, please let us know by liking and sharing the video. If you want YouTube or LinkedIn platform to show you our videos daily, subscribe to the channel. And if you want questions on any particular topic, let us know in the comments. We will cover that topic in the next class. And do take a look at our paid courses by visiting the website. You can take a free mock test by signing up for free. And the best part of our course is that you will get personal guidance from us. You may call us at the number on the screen anytime. Okay. Now let us get to the last question. Question 5. What is the maximum FDI limit in NBFCs? What is FDI? Foreign direct investment. Okay. So what is the limit for NBFC investment? Okay. Option A, 50%. Option B, 49%. Option C, 74%. Option D, 100%. Option E, 75%. So what is the limit beyond which NBFCs cannot accept foreign direct investment? So here the answer is option D, 100%. So there can be 100% FDI investment in NBFCs. But for banks, it is only 74%. Let us do a quick recap of what we learned in today's class. We learned that NBFC stands for non-banking financial company. NBFCs can accept term deposit for a period of 12 to 60 months, but they cannot accept demand deposits. And deposits made in NBFCs, they are not covered by DICGC insurance facility. And NBFCs, they do not make a part of payment and settlement systems. And they are regulated by RBI Act and Companies Act, but not by Banking Regulation Act. And the maximum foreign investment limit in NBFCs is 100%. And let me give you one extra piece of information about NBFCs. NBFCs need not meet any CRR or SLR requirements. Okay. So that is all about NBFCs. We shall end the class here. Download today's question and answers for free from our Telegram group. Thank you. All the best.